All right, well, welcome to the August version of the Beyond Wealth Advisors Economic Update. I'm John Cleaver.
I'm Dennis Bacon, Chief Investment Officer, Beyond Wealth Advisors.
Yes, and so here we are, almost through summer, and it's been an interesting start to the year, and maybe a little different than we thought coming into the year, but as we sit here in August, we've had a little bit of a surge, and through the month of July, that surge continued, which supports our thesis that if we're going to have a recession, it's not going to happen in the next couple months.
Right.
And if anything, it's going to push out. Now, what's interesting is that surge has been primarily driven by a small subset of stocks.
Right.
So the question is that going to continue, or does the market broaden out a little bit?
Well, I know I've heard it referred to as the Magnificent Seven on the stocks, but really kind of interesting. In the month of July, the worldwide markets were up about 3.7%, which certainly was excellent for 1 month. But what we noticed was a shift. We've been in this large cap growth space that's been giving all of the buoyancy to the market and pushing it forward. But during the month of July, large cap sector performed less than the world's average. The averages were driven primarily by small cap and emerging markets, which are two areas that typically do lead out of a recessionary environment. They typically lead because they have a lot of ability to work their way through the economies quicker. And the other interesting thing is during the month of July, every sector of the S&P 500 was up.
Right.
But it was led by the ones who have lagged for the first 6 months.
Right.
Financials and energy were exceedingly good. Energy over 11% return.
Right.
So I think that looks really good on broadening the market on a long-term basis. Better when you don't have just a narrow number of leaders. The bond market, on the other hand, continued to cycle in this range that we see, and we actually have seen the 10-year Treasury increase from about 3.5 just a few weeks ago up to over 4% at this point in time. This is considered kind of normal. We'd like to see it's an opportunity for those people who want income to reposition their portfolios into a little higher distributions, a lot higher interest rates. We had this several months ago where we got in this range, so we're back to where we were before. We feel like that's kind of a range-bound area right now where we're at.
So did I hear you say normal? So we're somewhat normalizing, maybe?
Normalizing, whatever that is.
that sounds pretty good. Obviously, we would take that over the alternative, I think.
Right.
And obviously, that relationship between equities and bonds kind of coming back into more of a consistent, predictable outcome is a good thing as well.
Right.
So you mentioned it just a second ago, energy. Commodities and energy are increasing. Sometimes that can lead back to some inflation. So maybe speak to that a little bit, and how does that impact kind of where we go from here?
Okay, well, kind of in a summary, I'd say that we have a broadening of the world economic markets, which you've said, a little bit of a normalize the bond market, which is excellent, and we're having this upswing in commodity prices. This looks a lot like what you see during a growth expansionary mode of the economy. So all of that really looks good. But to me, when this combined with the month-over-month inflation tempering some, that it really looks pretty good. The only problem with this is it's that balance, which that growth in the economy could stimulate inflation again.
Right.
And so that's a fine balance that we're going to have to kind of dance with for the next few months. I expect volatility to really take over a lot.
We saw that this week, actually.
We did. We saw that this week. We saw some jobs reports come out today that were not as good as what we thought, but not bad. Still good. With a little modification from prior ones, but still within the range we've considered to be reasonably okay. But with the shifting from the high flyers, the Magnificent Seven, to a broadening of the market, this causes some disruption in the markets. And that always leads to volatility. So we are really heavily expecting a lot of volatility over the next 6 months, between now and the end of the year. It may be over the next 3 months. It may be over the next 6. I'm not sure. But as we see monies flowing from one sector of the market to the other, it causes a disruption. From July, you can see this very emphatically because the emerging markets did so well, and we saw a lot of disruption on the large cap growth side. And we just expect that to continue.
Right. Yeah, you've used the phrase choppy waters
Mm-hmm.
in the past. And so that volatility continues, but overall, cautiously optimistic?
I would say that probably is true.
Yeah.
The biggest challenge we have been through a historically disruptive economy over the past several years. We have seen markets, we've seen the job markets, historic highs and historic lows. We have seen a swift change in historical business cultures. And with all of these changes that are taking place, I think that makes projecting the economic impact and the outcome very difficult because of all this. We have more debt than we've ever had. We have all these type of things, which are reasons for concern.
Right.
I think optimistic with what we see today, yes. Concerned or even fearful of what might happen is understandable.
Yes.
The way I would say is courage is the willingness to act in the face of uncertainty. Prudence is taking stock of your personal situation and acting accordingly with courage. Yeah. And that would be my key thing. There is know who you are and what you are from an investment standpoint, and have the courage to act on your convictions.
You know, that's a great segue into, just as we wrap up, you know, as we always do, just really encourage you to talk with your advisor. This is a great time. We've had some growth in the market. Maybe that's changed your outlook a little bit, but it's a great time to revisit, you know, what are your investment objectives and where are you headed and how are those playing out with your current allocations, and you know, just take another look at it. So,
thanks.
All right, with that, we will wrap up the month of August. I guess next time we come together, it'll be post-Labor Day, school will be in session, and there we go.
And so hopefully the Cubs are in first place.
We'll see. All right, have a good one.
Okay, thank y'all.